So we are in this extremely pivotal moment for Tesla stock, and this very next meeting that is about to happen in a couple of days could potentially change the complete direction of Tesla stock going forward. Now, if we take a look into Tesla stock, recently it's been pretty much on a free fall going downwards. In fact, if we zoom in just a little bit closer, we are actually getting closer to the prices that we were in January. So pretty much erasing all the good gains that we've had so far this year. Now, in this video, I want to go ahead and cover some of the macroeconomic events that are about to take place. And then along with that, I also want to cover some of the fundamentals that are taking place with Tesla, and then of course look into the technicals. However, before we go ahead and talk about this meeting that is about to happen that could change everything for Tesla, I do want to let you guys know that if you are new to the channel, make sure to tap that subscribe button, especially if you get any value from this video. Now, the first event we had to talk about is April 28th when we had the PCE prices come out. Now, the PCE report is similar to the CPI report in the fact that this is used to gauge where inflation is at. However, it's more important simply because we've had the Federal Reserve mention a copious amount of times that this is a report that they actually pay attention to. Now, the last inflation report that we had come out was a CPI report that came out a little earlier this month, and it showed us a clear picture that inflation is still a big battle for the Federal Reserve. Why? Because housing inflation and service inflation, right, two of the big contributors towards core inflation, is not coming down. So this PCE report is going to give us another example of where we currently are when it comes to inflation, and this is going to lead us to the big meeting that I mentioned in the beginning of the video, which is the FOMC meeting that happens later on in May. Now, the reason why this FOMC meeting is one of the biggest meetings for this entire year is simply because this could potentially be the last meeting where we had the Federal Reserve hike interest rates by another 25 basis points, and then from there pause, right? Now, why could they possibly pause? Well, we see that economically things are getting a little bit more tougher. We're actually starting to see jobs get cut off more and more, and this is what the Federal Reserve wants because they want to know that the tools that they have in their tool belt are actually effective in slowing down the economy. So if we see, or we hear what they say on this meeting of them actually saying that there could be potentially a pause, well, based on that, we could see the overall market just pretty much skyrocket because the market is very forward looking, and obviously if we had the Fed's pause, well, that means that they're not going to hike anymore, and that's very bullish for the overall stock market, including stocks like Tesla. So this is just a macroeconomic event that could change everything for Tesla going forward into the end of 2023. Now, aside from macroeconomic events, I want to go ahead and slide into the conversation of fundamentals for Tesla. So we've had fund manager Ross Gerber, who's a big Tesla bull, come out and say that Tesla, what they need to do is start advertising.
If you take away the name and you say it's a stock, stocks go up based off earnings. And if they keep lowering prices and they're not defending margin, they're lowering earnings. So essentially what they're doing is they're taking shareholder value and giving it away to the new buyers of Teslas who are getting the deal of a lifetime because they refuse to create demand through traditional levers. Remember, 90% of Americans don't buy an EV, and yet now it's the average price of a car, and yet the value proposition on an operational basis is massive. I mean, you don't pay for gas, you don't pay for repairs. I mean, the cars work wonderful, and we're not even talking about the technology and that it's great for the environment. So the fact that they haven't sold out of every car is crazy when gas costs $120 to fill up your gas tank.
Now, there's a big division of what people believe Tesla should do as far as handling the business model. And on one end, we have individuals on Twitter saying that Ross Gerber is right and Tesla needs to advertise because not advertising is silly. However, on the other end, we have individuals saying this is how good companies get destroyed, by catering to shareholder value instead of executing on a principled business execution. Now, we know that Tesla stock has been going down ever since the last earnings report where we saw that Tesla had to slash margins in order to scale their vehicles. Why is Tesla doing this? Well, they're kind of in a price war with the other EV manufacturers where they're pretty much slashing their vehicle prices, and it's forcing the competition who is not profitable with EV vehicles having to, slash their prices too and making their companies more unprofitable. Now, the view with this is that, okay, well, this is going to hurt the competitors and it's going to keep Tesla in demand. However, the arguing view is that that Tesla shouldn't have to do this and they shouldn't slash margins this bad. And in fact, they should just invest more on advertising to generate more demand. Now, I want you guys to let me know in the comment section below, which side are you on? Do you think that Tesla needs to actually stop cutting prices and just advertise more to get more demand? Or do you think it's right what they're doing, where they're going the route of just trying to kill the competitors by just slashing their prices? It hurts margins in the short term, but it's going to help Tesla scale up in the future because competitors won't be able to compete. I know what side I am on. However, I just want to hear your thoughts on that. Now, hopping into the technicals of Tesla stock, I want to go ahead and cover a few things. Now, I have this terrible drawing over here on the chart, but trust me, you're going to go ahead and want to watch this a little bit longer because I'm going to break down a couple of things here. Yeah, I draw terribly, but I'm going to go ahead and make sure that it makes sense. So I have this arrow pointing to the circle over here in red where there's low volume by price. Now, a multitude of different times on the channel, I've said that when there's low volume, not by time, but by price, we see a stock move severely up or severely down in a short matter of time because there's not a lot of exchanging between buyers and sellers. And so right now, the direction of Tesla is downwards, and now there's low volume. So that's why we're seeing Tesla go down very hard and very fast, right? Now, right below that, we see that there is some volume by price around the $140 price level. And in fact, I highlighted with some yellow little line dots or whatever, you want to call this. I'm not even sure. I'm a terrible artist. But we see that when there is some volume around that $140 level, we actually see that it could possibly be a little bit of a shelf of support as it was back in the past in September. So this is something that I think we should pay attention to. We may see Tesla go down to the 140 levels, but around there we may end up finding some support and then possibly bouncing straight up or coming down further. Now, what is going to, cause Tesla to go up or down? I believe this really comes down to the next earnings reports and of course the catalyst events. Now, what potential catalyst events can take place with Tesla? Well, there are a couple down the line. Well, one of the main ones is going to be the rollout of the Cybertruck. This could potentially be a catalyst event that could push Tesla back up once we end up touching an area of support. Another one could be an announcement of a new Gigafactory and also a new CEO for Twitter. Elon Musk has joked that his dog is the CEO of Twitter, but I believe that once he announces an actual, person to be the CEO of Twitter, well, this could possibly put some more optimism in Tesla because remember, a lot of people believe that Elon Musk is putting too much focus on Twitter and not focusing on Tesla. So that's another catalyst event. And then of course, a rollout of new vehicles, the new models when they're going to be announced, that could be another catalyst event. And then of course, they share buyback that he mentioned last year that is potentially going to happen this year. He mentioned that he may, do a $10 billion buyback. And we know that buybacks generally cause stocks to go up because people believe that when, the companies are investing back into, the actual stock price, well, that's very bullish. So we may see that happening. Again, we don't know. We have to pay attention to the earnings. We have to pay attention to these catalyst events as they roll out and see what ends up happening. Now, my view on Tesla in the short term, I'm kind of bearish on Tesla in the short term. In my trading account, I may be shorting Tesla. I may not even be touching it. However, in the long term, for my long-term account, which has exposure to Tesla, I am slowly but surely adding more shares and dollar cost averaging because I believe that Tesla is going to be a very successful company as we get closer to 2030, right? I don't have the same price target as Cathie Wood, as I mentioned in my last video. I'm not as optimistic as she is. However, I am optimistic. I'm bullish on Tesla in the long term, just not in the short term, if that makes sense. But hopefully you guys enjoyed this video. Make sure to subscribe, like, and leave a comment down below. And with that being said, make sure to watch this next video right over here, and I'll see you guys on that next video. Take care, guys.